Megan, the U.S. 10-year yield is at 2.5961 right now. At one point last week, we did get down to 2.54 and change. Does it stay at these levels, and is the Fed comfortable with that?
So I think it could go a little bit higher, but not significantly so. So I very much believe that we're stuck at kind of lower for longer at the long end of the yield curve. And the Fed does worry about it because, of course, if the Fed wants to hike again, and I do think that it will end up doing that, it does have to worry about inverting the yield curve. And that may not matter this time. The yield curve has predicted 7 out of the past 7 recessions, so it is a good indicator for recessions. You could argue that, the yield curve's so flat in part because we're issuing so much debt at the short end, and because the long end is held down by the fact that traders are using long-term bonds as a equity hedge risk in a world where deflation is the fat tail risk, not inflation. So you can say it's not really a reflection of growth prospects. That being said, if most investors think a yield curve inversion results in a recession, they'll probably behave accordingly and make it happen. So I do think that the Fed is concerned about the long end, only in that they really don't want to invert the curve.
Megan, we saw from a technical point of view U.S. equities breaking out Friday. They're kind of holding in there this morning. If the rally continues with a little bit of sort of wind behind it, how does that re-embolden the hawks when it comes to the Fed?
Well, so if equities continue to rally, then financial conditions ease. And if you look at the cross currents that Chair Powell cited for why the Fed was pausing, it included tighter financial conditions, Chinese growth, global growth, Brexit, maybe inflation to some degree, though inflation's been weak this entire cycle. I think in the second half of this year, financial conditions are already weaker. Chinese growth should look better. Brexit might still be a mess, but that's a real second-order issue for the U.S. I think all these cross currents will actually look fundamentally different. So I do think in the second half of this year, particularly if we continue to get an equity market rally, the Fed, we'll be having a different conversation about what the Fed is really looking at. And I do think that there is a room for more rate hikes in this cycle. 1, maybe 2, so nothing dramatic, but I don't think that the Fed is done.